Pop it up. There's my man Alex. Alex, how's it going?
Oh, it's going great, going great. I was just making sure I was on. I wasn't sure if I could be heard or seen. So,
Coming through loud and clear, looking great as always. I
thank
had
you,
to
sir.
put the throwback on just to help rep sales boomerang.
Yeah.
Um, I know you've been a busy man today, and give you kind of a quick chance to do a plug here. And your partner in crime, Mark, will be joining in here with us momentarily as well.
Cool. Yes, yes. Busy. I just literally, yeah, I just hopped off a webinar. And
Right
and
with Lori.
yeah, it was Chris instead, but yes, with LBA where and
Oh, I'm
Chris is
sorry with
like
Chris. My bad. Well, yeah.
Chris looked at the watch and he's like, aren't you like speaking in 1 minute? I'm like, yes, I am. Oh man, so here I am.
Oh, good. Well, I want to welcome our attendees in to the latest edition of Tech Talk. We've got Sales Boomerang co-founder, CEO, and Chief ROI Booster Alex Kutsishin with us today. First off, real quick, just a reminder, Tech Talk every other Thursday, where I'm joined by a special guest in mortgage tech, kind of chat about current events, new innovations, consumer experience, and so on. You name it, we're here to cover it. So, attendees, any comments, suggestions on future discussion topics, industry leaders you want to see on Tech Talk, go ahead and drop them in the chat Q&A function, or you can reach out to anybody on our team here at TMC directly. Alex, I want to thank you for doing double duty today and coming to join us here on Tech Talk. I
Anything
know
for TMC, you know
busy.
that.
Oh, anything, brother. I appreciate it. I know you're a busy man as always. As we were just kind of talking about, you literally just came over from hosting a session with Chris Castle at LBA Ware and Bill Napier with Homespire Mortgage,
Yep.
specifically on how you keep your pipeline full with borrower and business intelligence. So
Yes.
as we kind of
It was a
jump
great
in here
conversation,
too,
by the way.
yeah, and that's why I figured I'd give you a free plug here just in case yeah, any quick takeaways wanted to impart from the session on our audience.
Yeah, so real quick for everyone that's listening in here, first of all, thanks for joining us and thanks for having me on, Tom. Always a pleasure. Love this audience. Um, so what we talked about there, Bill just did such a phenomenal job laying out their growth strategy and and go to market strategy and how he's using technology to support that. And one of the key things he said there was, look, we are growing through LO recruitment. Our LO recruitment is our growth strategy. We are recruiting heavily, but very intelligently, using technology to identify the markets. Think about this for a second. Identify the markets they can have the most success in, finding those people, and then tracking to make sure that they have that success. So it was brilliant. We talked about that recruitment strategy, and then of course he's bullish, very bullish, very excited about standing up and growing the consumer direct division, saying that that's going to be a huge part of their growth strategy for the next couple of years, and so and maybe beyond that. But it was a wonderful conversation. Truly, if I was sitting in the audience from the lending side, I would have taken pages and pages of notes. It was that powerful because he held nothing back. He talked about the company and why they've done what they've done. And it's just, you typically don't get a look inside an organization like that unless you're in it. And so it was truly a blessing to have him share that.
No, that's awesome. And you're so true. It's really beneficial and unique when somebody's willing to kind of have that pay it forward type mode to share, kind of strategies under the hood of a lending organization, such
Yeah.
a competitive marketplace out there. We try to do the same thing at TMC, just knowing like, especially in this mid market in particular, we're all, if we can impart the key knowledge on one another, there's all market share for all of us to kind of win
Yes.
in the lending landscape. And it's so cool too. I gotta imagine it kind of worked twofold, just leveraging technology to hone in on your recruitment strategy, in particular when thinking about how you're driving business through your consumer direct channel and kind of
Yeah.
meeting, the consumer where they're at these days. And you see how quickly homes are flying on the marketplace.
Oh,
If you're not on that lead right away to be able to follow back up with a potential applicant, like you're going to lose out on that business. So
this
the
is true.
smarter and the quicker our originators can be able to jump on those opportunities for business you can capture.
And look, when we talk about recruitment, and I know we have a whole segment to go through here, but we're kind of this
Right.
is kind of good flow here. When we talk
Yeah.
about recruitment and technology, you know, great originators, they find ways to be efficient. Great originators find ways to be efficient because the only way they're going to do more deals is if they can find a way to do them faster, easier. And so you'll see a lot of originators. I'm talking about loan officers now, maybe branch managers and loan officers in their team that will find ways to create those efficiencies. So if you're an organization that doesn't have the technology to show a potential branch that come over your way or a potential originator, show them, hey, when you get here, you're already doing well. Guess what? You're going to multiply that times two because we're going to take care of all of this for you. We have the technology, the automation, it all communicates properly. We're going to take care of this heavy lifting for you. So come join our team, because that's one of the things Bill talked about is using technology to recruit and use and finding the best ones. And your job is to show them why your organization is better for them than another, or standing alone and maybe whatever they're currently doing. So using tech to recruit, right? Recruitment as a growth strategy, one, but using technology to recruit. And then, of course, that same technology and the same process should retain that originator, right? If you've recruited them, you can retain them by continuing to improve the technology you have there and making even more efficiencies. It's just, it's it's a flywheel, as we like to say, but you got to get that flywheel moving.
Right. And but it's so spot on. I mean, we're getting a lot of that from our members lately. We're finally coming around to saying, you know, I've got a unique opportunity if I'm aligned with the right partners. Sales Boomerang, obviously, being one, just with the great tools that you're offering your clients on retention capabilities. And you think of like your CRM or your point of sale. I mean, being able to create that optimal consumer experience or just efficiencies for originator and their team, like that's a powerful tool to stand out against competition right now and bringing in those best in breed originators out there.
Yes, yes, no doubt, no doubt, no doubt. Well said.
So Alex,
So
I love to have part of these discussions. Just I'll letting our guests know a little bit more about your background and being a technology entrepreneur within our industry and kind of how you found your way into sales boomerang and mortgage. Since I imagine it's probably not the career path you set out on as a young man growing up.
yeah, you know what? So no, it's well, yes and no, because my career path from very early age, I started my first company when I was 20 years old, and a first official company. I was hustling and running around and starting little businesses here and there unofficially, since I was like 14 years old. But officially starting an organization, I was 20 years old, and so this is part of my career path is building teams. It's that's what I'm starting to understand. I like to build teams and I like to build business models. And so how I got to Sales Boomerang, how we ended up here is I was consulting for a mortgage marketing company, which is one of the best direct mail mortgage marketing companies. Let me rephrase that. It is the best in the country still, and continuing to get better because they're investing in themselves. Beautiful company by name of Monster Lee Group, also known now as Monster Technologies. Anyone listening in should check them out. But I was consulting for them, and the reason I was consulting for them is because I sold my shares in my first technology company, and I did not want to be that CEO that said the one thing I regret is not being able to see my kids grow up. So I was like, you know what? I'm going to start a from home consultancy, so I can see them both walk and talk for the first time. So I can see that. So I don't have to be that person that says I wish I would have done that differently. So because of starting that consultancy, which was all about hyper growth, like I love hyper growth. If you want to grow 10% a year, I'm not your guy. You want to grow 100% a year, I'm your guy, right? So in starting that organization, one of the associates that I have, his name is Ken Bartz, and he owns this company, Monster, that I told you about. He asked me to consult. I came in, they showed me some statistics, showed me that the conversion rate in the mortgage industry is 10%, and everyone loves that. That means 90% of people don't take a loan from the lender that they speak to or inquired with, or at least at the moment that they inquired, and blew me away. I said, what are you doing with the 90% that didn't take a loan yet? And he's like, what do we do? Nothing. The lender's going to buy that lead again. It's like, time out. Again? I'm in your database. Just call me. He's like, no, it's not how it works in the mortgage industry. You buy that lead again. I was like, wait a minute. What if we just started telling lenders when to call them and for what reason and what the benefit is? And so that's how we bumped into to sales boomerang into the mortgage industry. And I'll give you one story. This is the thing that, because I didn't just after that go, let's start sales boomerang. I needed to do some
Right.
research, right? I said, and this is a true story, and then we can jump to the next question. I said, okay, so let me find out if the mortgage industry thinks about their customers the same way I'm thinking about their customers. What if the mortgage industry truly does not care about 90% and all they do care about is the 10%? What if that's the case? And so I had Ken introduce me to a friend of his who was also a client of his who was 20 years in the mortgage industry. And he gave me a list of credit denied customers that he credit denied in the last 12 months. Now, this person focused on a lot of low income, low credit type of customers. That was his core focus. Okay. So he had a lot. Everyone that's listening, 1,572 in 1 year, that's a lot, right? Unless you're a really, really big institution, that's a pretty big number to credit deny in 1 year. And so he gave me this list and I asked him, what do you expect to get back from this denied customer list? And this is the true. He goes, if one customer comes back, that's a win. I said, oh, out of 1,572 people, if one customer comes back, that's a win. He said, yes. I said, great, give me this data. And I go and I connect with the bureaus, and Experian gave us our first chance to kind of analyze, and they gave us a chance to run what's called a statistical data report. Just statistical data. There's no names attached to them. It's just the results off of this list. And so I went and had this report run, and come to find out that in the 12 months since he's turned these people down, 112 of them already took a loan. Tom, I just said a second ago, he'd be happy with 112.
Right.
So I stepped back and I was like, this is weird, because this guy's been in business for 20 years. He had to have known that more than one is going to fix their credit and go get a loan. But no, he didn't. And then I found out, I said, can you give me one more piece of information? How many people on this list didn't take a loan but are credit qualified? The number was 444. Remember,
Wow.
he would have been happy with one. We're talking about over a third of his denied customers are either qualified and took a loan or qualified and sitting on their couch waiting for somebody to help them. Okay. That's how Sales Boomerang was born. That was it. And then I did a dozen of those reports. It wasn't the only one, but I was
Right.
like, either this guy is a really bad business person or this is plaguing the industry. And it was plaguing the industry. And so that's how we got here.
And it still is. But I mean, that's amazing. Before the existence of Sales Boomerang, you're already able to identify, a third to 40% of
Yeah.
those turndowns that, to your point, within 12 months, uh, got a loan somewhere else, um,
Yeah. Take a note, people.
or were able to
Seriously.
be in position to get approved.
Take a note. This is important for everyone listening. This is very important. We'll talk to our clients and we'll say, how many people do you deny a month or a year? And they'll go, well, we don't have too many turndowns. We really have good customers. 700 and up FICO's really good customers. I say, okay. Uh, how many people do you pull credit on that don't move to an application? There's a better question. And they go,
Right.
oh my gosh, I couldn't even tell you that number. Those are the people. Those are the people that need you the most. And why you're wearing a shirt no borrower left behind, why I'm wearing a shirt no borrower left behind, is because those are the people, not the ones you deny after application because something went wrong, because that's what everyone thinks about. But the ones you pulled credit on, and you couldn't even send them to an application, they just weren't qualified. That's where the magic is. That's where the gold is, right? And they're the happiest to hear back from you when you can contact them and say, I got great news for you, Mr. and Mrs. Borrower. I know we spoke 7 months ago. At that time, you couldn't qualify for this program. You're qualified. Like, I'm so excited to share this with you. Talk about repeat business. Talk about referrals. Talk about happy
Yeah.
customers. Forget about it. It just
The
happens.
biggest transaction in somebody's life, and you're suddenly making that accessible to them. I
Yes.
mean, that it literally is a layup to my next question, which obviously we understand where you got Chief ROI Booster, or I believe another great title I've seen was the Jedi Master of Lending Secrets. But I gotta ask, was that from the mind of Alex, or who dubbed you some of these awesome titles?
Okay, so the title, our Chief ROI Booster, was me because our first campaign before we even launched was ROI Meet Your Steroids, right? That was it. ROI meet your steroids. So for every dollar you put in, we wanted to make sure you're getting at least $5 or $6 back. As you know, now we're at $24 back for every dollar invested when somebody works with Sales Boomerang. But that's where I was like, you know what? That's what I do. I'm not a CEO. I just help ROI grow. That's all. So Chief ROI Booster was me. And then somewhere in LinkedIn, I have to give credit to this person. Someone commented on LinkedIn and they said, dude, you are like the Jedi Master of lending secrets. And I'm like, I don't know if I deserve that title, but it's funny enough that I'm going to take it. Uh,
Oh,
it's
totally.
clever enough that I will own it and I will wear it with pride. And I have it saved somewhere, so I'll find who that is. But somebody said that, and that's where that one came from.
That's awesome. Just a reminder, everybody, this is TMC Tech Talk. Got Alex Kutsishin, CEO, Chief ROI Booster, co-founder, Sales Boomerang here with me. Alex, I want to talk about, kind of current events, that are driving mortgage tech right now.
Yeah.
Obviously, we're focused on a purchase-centric environment and an inventory crisis. And I'm curious from the Sales Boomerang perspective, how are these current, let's say, pitfalls, if you will, within the industry? They don't have to be, but could be perceived that way, kind of helping evolve how Sales Boomerang's approaching like your technology or your alert offerings to help kind of support your clients and consumers as we head in the back half of 21.
Yeah, great question. I mean, I could talk about a lot of different technologies that everyone should be looking at. As far as Sales Boomerang goes, one of the core focuses is priority and high profit loans, and making sure that your cost per acquisition is as low as it's ever been. Because when we're talking about a compressing margin environment, you need to spend as little as possible on doing the loan. Now, hear me. I'm not saying stop marketing. As a matter of fact, probably do more. I'm not saying stop investing. Do not cut the wrong expenses. What you want to do is increase efficiencies. Stop cutting expenses that you don't need to cut, that you wish you hadn't after you do it. If you're not measuring success and you don't know how well something is performing, shame on you, but cut that. Because if you don't know how well something is doing, let it go or measure it instantly. But how we're helping our clients is we're making sure that the cost per acquisition is as low as it's ever been, prioritizing certain loan notifications over other notifications, delivering complete loan scenarios for qualified customers, where it's not, if you have credit and equity, then I can do this loan. No, we're delivering a notification that tells you they have the credit, they have the equity, their rate is higher, their value of the home is there. Check out the debt they have. A cash out is perfect for them. Deliver this valuable message today, right? So eliminating unnecessary conversations and only focusing on those conversations that have a benefit for the borrower and you, and the value is there. You're not spending $3,000 to do a loan to make you $200, right? And by the way, your loan originator is going to make their full 150 basis points or 115 or whatever. It's you, the lender, that's not going to make the money right now when markets compress, when margins compress. So you have to be super efficient, and that's where Sales Boomerang is hitting home runs right now. We had this case study that just came out and that we just talked about recently with Total Expert, which is another member of yours. It's 20. We did a case study on American Pacific Mortgage, and look, everyone, listen, write this down. Imagine if you could do this: $22 per closed loan. Okay, that's where APM is with Sales Boomerang. It cost them $22 to convert a borrower to a customer. Okay, we're talking about Bank of England, that 38% of every alert Sales Boomerang sends them turns into an application. 38%, almost doubled the performance of any lead they purchased outside of their own database. We doubled the conversion rate almost of every other performing inbound opportunity versus what we created from within their database. And why is that important? When you're an organization that has plenty of records that can turn into deals, it's the least expensive way to do a deal. So in this compressing margin market, why look anywhere else? Start at your own house. Protect. You know how Ray Lewis used to say from Baltimore, we must protect this our house. This is it. Protect your house.
Perfect quote from your local guy
Hey,
too.
my
I know you're a
Baltimore
big
Ravens.
Ravens fan, right? And I got to throw a plug out too. We'll definitely put it in the follow up as well. You had a great ebook on cracking the code for borrower retention. Some
Yes.
awesome findings from 19 lender clients that way outperformed their peers. I forget what the specific X multiplier
Ele-
was, if you may
11
know it offhand.
11.66% growth in retention, and which really equals to tens of millions of dollars in not volume, in revenue for an organization. It was the study was jaw dropping. We couldn't believe it. We could not believe it. And there were some amazing discoveries there that showed we had clients that went down in retention. Think about that. Why would I stand here as the CEO of Sales Boomerang and tell you that Sales Boomerang was working with a lender and their retention rates went down? I'll tell you why. Because that organization hasn't rolled it out. Not that one. There we had like several big nationwide that have been piloting it for way too long and only have branches on it instead of a top-down approach. Their entire organization lost customers, more customers than they gained. That is an issue.
And
Every
was it
single
just because
organization.
they weren't focusing on what the performance was of those branches that were deploying Sales Boomerang?
So we did this. So Tom, we specifically wanted to do this as a non-sales boomerang specific case study. Meaning, if we focused on that, um, we would have biased results. What we wanted to do is look
Right.
at the organization as a whole. Just step back and go, hey, if you didn't have an automated retention strategy before this year, and this year you incorporated it, what happened to your business? That's it. Just that alone. And so we looked at the organizations, not the divisions that are using it, which is what gave us the great discovery. Because if we just looked at the organization, oh, we would have had even greater results. Like it wouldn't have been fair. But we wanted to show the whole thing. Those that believe top down, those that only believe in a focused approach, and those that only believe in a focused approach where it's a division or a certain region, they saw their retention rates as a company go down. Everyone that's had it rolled out to everyone as an organization top down saw their retention rates go up on average by 11 points. Remember, everyone that's listening, as an industry, it's 18% as an industry. So imagine if you were just par with the industry and you had this turned on, you would be at almost 40%. Okay. Oh, I'm sorry, almost 30% retention, right? You would add 11.66 to that 18, you're almost at 30%. So just think about that when you're talking about automating retention strategies and what it does to a business, not just to a small group. So anyway, yes, that case study, you'll put a link. It's beautiful.
Yeah, and I mean, I can't think of a better way in, if we talk about compressing margins and, fighting that much harder for the client base right now. Everybody's fearing they might drop volumes by 20% over last year. I mean, that bridges the gap right there into how you maintain the record volumes in 2020, in 21 and beyond too.
Yes.
And it's not like you and your team are putting out new impactful different alerts out there as well to help, to your point, kind of amplify
Yes.
the message that you can then bring out to your consumer or your existing client as to why to bring them back to the table or the opportunity out in front of them.
Well, 100%. And your original question, Tom, too, was about, with what's happening in the market, how are we sort of rethinking, or how are we adjusting or pivoting to help in this market? The other thing, besides optimizing and prioritizing and making sure you're doing profitable deals and it's cost less, it's also helping your partners. So, like your referral partners, this is a time to build forever bridges with your agents and help them in this environment, because they're having people that come to them that are looking at a house that they can't wait to put a bid on, and then boom, that house gets a bit bigger bidder, and now there's no properties available because you have these large investment banks now that are coming in and buying, right? They're buying thousands of properties and turning them into rentals. Bill was just mentioning this on the call. You're seeing it in the news. And so the inventory is now going to these larger organizations, and you have a customer that just they're got to wait a month, 2 months, 3 months, 4 months. Your realtor, your agent may lose that relationship, but with you being able to show them that, hey, they're back, they're ready to go again. Now you're helping your agents as well. So it's helping. We're finding ways and reasons for lenders to help their referral partners too.
Well, and I'm glad you mentioned that because I know you spoke recently at Engage Marketing through Housing Wire, kind of specifically around how you can enable lenders to work with the realtor partners to
Yes.
actually drive net new customer business and essentially create like exclusive relationships between lenders and the realtor partners. I'd love if you could expand for a minute how you make
Yeah.
that possible.
Yeah, I love that. I would love to do this here. So, look, when I got into the industry here in 2017, the thing I heard the most were how important realtors are to lenders. And the way it was explained to me is, Alex, they're so important because they have all the referrals. That means they have our business. Like, they have the business, they feed us. And so we go to them and we say, please give us referrals. And we put our hands out and we say, how can you put more referrals in this area here? And it was very confusing to me because yes, they have people that want a loan for a home, but I did never agreed that they had more to give than the lender. I always believed the lender had more to give than the agent, and there's nothing to take away from the agents. It's just if you look at the amount of customers that a lender deals with as one unit versus an agency brokerage, you'll see that the lender has a lot more people. Okay, and so the reason they have a lot more people is because not everyone qualifies, not everyone moves forward, right? That's what happens. That's why an agent closes 10 deals a year and loan officers close, on average, I think it's like 4 a month or something like that is the average. There's a big difference. Think about it. It's a 4x. So you actually have way more opportunities than your realtor, but nobody was open to the idea of giving it back to them always. And so what Sales Boomerang has done is turn the tables in a positive way for the mutual relationship. Hey, Mr. and Mrs. Realtor, every single person you refer to me, I'm going to give back to you, and some, and some, because I'm only going to work with a select group of people. And so I'll give you guys an example that's listening. Let's say you have a database of 10,000. You're going to produce anywhere from 500 to 1,000 opportunities every single month. 30-40% of them are going to be purchase related. 10,000, let's say you're producing just 500 opportunities, and let's say it's just 30% of purchase. That's 150 purchase opportunities in 1 month. None of your agents can give you that in 1 month. They can't. And so how do you create exclusivity? You give more referrals to your agent and you make it clear that we are an exclusive relationship here. Keller Williams and Keller Mortgage, they've made it clear. If you can align brand messaging, if you can create a cohesive customer experience, you can retain customers on both the realtor and lender side. They're proving that every day. And so instead of buying a brokerage or standing up another company, Sales Boomerang can help you bridge that gap because you can give more to your realtors than they give you, and you can ask for their loyalty in return. I'm going to give you everything, but let's work exclusively. Let's come up with a program that makes your buyers love you and love us. And let's give them that respect right back when they're ready for another loan. When it's a refi, Mr. and Mrs. Realtor, guess what? I'm calling you. Why would you call me on a refi? I can't make money from that. So that you can service your borrower, your buyer. That's why. And so that is how you create exclusivity. You give more than what you take, and it becomes this really fruitful relationship.
Well, it's so smart because you've really got to, change your train of thought. And to your point, it's always been assumed that, well, I can only get more from my realtor referral partner than I'm able to get back simply because they're in front of me in the transaction process, particularly on a purchase.
Sure.
And you're so right. It's all based on opportunity. And if you're able to provide more of that opportunity back in return, it doesn't have to matter just because they're the front line of that home purchasing transaction process. And then you're hoping that you're going to be the one that gets the call on loan close. Absolutely.
Exactly right. And then Tom, you take it one step further for 20 seconds here. Imagine using that same resource as recruiting new agents. Think about that. And you can recruit one agent at a time. Look, Mr. and Mrs. Agent, I referred over 150 purchase opportunities to my agents in the last month. Uh, my agents are so busy, I need to find one more person to add to my network. Would you be interested? What agent isn't listening to you? What agent isn't going,
Right.
whoa, I'm in. How do I get a piece of that? So just think about that.
Oh, it's awesome. Remind everybody, Tech Talk, Tom Lucci here with Alex Kutsishin from Sales Boomerang. Alex, I want to close out today, just kind of shining the spotlight on you guys. Love your perspective, maybe quick opportunity to kind of tease out, what you're currently excited about, maybe on the alert side, or, to the point that you might be willing to share anything that our members should be excited about kind of coming down the line from Sales Boomerang.
Yeah, great question. So one of the things we're really focused on right now is all of our integration partners. We realize now that investing in Sales Boomerang is supporting your investment into other technologies that you've invested in, or if you've invested in other technology and then incorporating Sales Boomerang, you're supporting those investments, right? And so we want to, again, I'll throw out something like a total expert, something like a mortgage coach, right? Where it's when you have those technologies, if you can make our technologies communicate better, more efficiently, everyone wins, right? If your tech can help reduce the time, remember we're talking about efficiencies, then everyone wins, and the cost of everything goes down. The cost of acquisition, the cost of discovering new opportunities, conversions, all of that. So that's one of our key focuses. You're going to see increased integrations and improved integrations with better results, where 1 + 1 = 10 from all of those integration partners. So that's number one. You guys should all look out for that. Really cool stuff coming. Still really honing in the loan scenario programs, where you're getting an entire loan scenario delivered to you, and not an alert where you, the lender, are actually creating the event for your borrower instead of responding to an event. And there's no competition. It's like buying a lending tree long form, but not paying $150, paying $10, right? Like, it's your database. Instead of buying that lead, you can have that same lead come from your database. That's the beauty of this thing. So we're still really focused on making that better and stronger. The results have been great, but we're making that even more so. And then we've just, I'll share this one, and we're going to do this to all of our notifications. So like, we've had this equity alert where our clients can set a target LTV, and when their clients reach that target, they get notified. Well, there's been so much equity activity, right?
I
You
was
sell
gonna
a house.
say it's got to be going like wildfire right now with all the alerts popping up on a daily basis.
It's going nuts. However, there's learning, and our clients, we love our clients. They're absolutely the best customers you can ask for. And they come to us and they say, "Hey, this is causing issues." And it's like, "Well, what's causing the issue?" "Well, I sold this person a house, and 6 months later they have plenty of equity." "Well, they had equity when they bought the house. So this isn't even an alert. Like, they already knew that." And it's like, okay. So now we're doing differential. You're going to say they purchased a house, closing LTV was 78%. I want to know when it changes by 10%, not a target LTV of 775, but when the equity goes up by 10 more percent, then notify me. So differential instead of a target, a differential of closing versus now. So things like that. We're constantly optimizing the programs to just deliver a more relevant, more accurate notification. So those are some of the fun things. And of course, you've heard me say this, but our goal is to be able to schedule the next loan with our clients. So look out for that in the coming years. We're going to create a system where when you do a deal, you schedule the next one right there on the spot, and your customer is involved in the process, so they feel like they're sort of writing their own history, their own future. And it's going to be an exciting program to roll out, and it's one of the fastest ways we can create confidence in consumers about the financial industry. So that's a big
It's
one, but
so
that's a couple
intuitive.
years.
Yeah. But yeah, always thinking multi-years down the line. And I can't think
Yes.
of a better way to set that deck with the client at loan closing or during the loan process that, hey, we're going to be here with you and we're going to be ready to go. And here's going to be the scenario and sequence of, when this opportunity is going to become available to you. We're going to be waiting for you.
Well,
I'm
let me
sure
make
there's
it
a
even
lot more
different,
to
Tom,
it
real
than
quick.
that.
Let me
Yeah.
rephrase that for you. Watch this, and then we'll end it here. This will be a good ending.
Okay.
So it's going to be even easier than that. Tom, thank you for giving us a chance to earn your business. We love that we did this loan and got you all this. Check this out, Tom. What would you like to see your next loan look like? And you'll go, "Oh, well, if I can pay $200 a month less or better, I'll do that. If I could cut 10 years off like, there'll be a checkbox. I'd like to cut 10 years off my mortgage. That would be a cool refi to do. Fantastic. I'd like to do an investment property. Awesome. That means you can, when you have enough money to take out of your equity to put down, you'll do yeah, absolutely. You choose your destiny, and that's it. Now you know exactly when the next loan is happening and why. There's no surprises. There's no, "Oh, that Quicken ad reminded me I should call my lender." No, that's not for you anymore. You've already designed your destination, right? You've designed it. Now you just sit back for that moment to happen. And so, or a better moment to pop up, and then there's a notification that says, "Tom, you have a better loan option. You want to cut off 10 years? There's a 15-year cutoff we can do for you." Okay, great. So that's where we're going to head.
that's so empowering to allow your client to kind of chart their path right from that initial transaction too. And to your point, the expectations already set. And on top of it, if the scenarios improve, equity improves, their life changes, boom, they've got even more opportunities to come back. So
Yes.
I always love picking your brain and hearing what's coming next because you're always at the forefront of it.
Thank you, my man. Thank you so much.
Alex, I hate to cut it off here, but I always love the time. I want to thank you again for being my guest. I want to encourage our members. If you haven't been talking to Sales Boomerang, you need to. And if short on time coming up, definitely make sure to meet with Sales Boomerang and the team at TMC Summer Conference coming up in
Absolutely.
mid-September in Terranea.
Tom, thanks so much.
Alex, always
Always enjoy this.
likewise, my friend. You have a good afternoon. Great to talk to you, and hope you close out the week well.
Thank you. You do the same. Thanks, everyone.
Thanks, Alex.